The content on this channel is for informational and educational purposes only. Please contact your financial advisor for any financial questions you may have concerning your investments. We are officially in the extreme fear area of the fear and greed index in crypto with a 17 overall. What is leading to these drastic drops in this sentiment within the crypto market? We're going to give you three guesses, but really the first two don't count. Just think back to December of 2024 and what crypto was doing at that point in time. Even after the election, it was still rising. People were still giddy about the prospects of what was going to happen with XRP. It was still projected to be around $6 by sometime next year. Now, that's not to say that it can't, but in this current downward spiral that all cryptocurrencies are in, it's hard to see that. If you were managed to eke out some of those profits before the big stumble, before these major sell-offs, um, good for you. But those of us who just are not pulling this thing out until the wheels fall off, literally, or until we hit that $6 amount, um, please be encouraged. Don't be discouraged. These markets tend to do these things, but what's exacerbating what's going on, and not just the crypto markets, but any investment market, is the uncertainty of the policies that are being injected into it. And it is attributing to this really exaggerated extreme fear side of the fear and greed index, currently running in at a 17 this week. That means that people are definitely afraid of putting any money into the market right now because you're going to lose it. Um, I think what typically happens in these markets, whenever you're talking about stocks, bonds, crypto, this is the time where the big wigs feast. They're going to set the tone, but I don't believe that they're going to set that tone until they get a little bit more certainty into these markets. We could be in this for a long haul, judging by the amount of executive orders coming down that are having direct impacts on these markets. It is not hard to predict what's going to happen. Um, this is some really unprecedented times where these are a series of unforced errors being placed upon the markets through no fault of the markets themselves. Well, we just talked about crypto as being one area of investment. What's going on with the housing industry? Well, same thing. A lot of bad news, particularly in Florida and in the DC area. Policies that are enacted right now through the massive layoffs and terminations through the federal government workforce, with the Department of Government Efficiency slashing jobs like it's a fire sale. Those high paying jobs that these individuals had in that DC area, particularly, are going to have a major or having a major effect on home prices. Um, People are going to have to start looking at lower and lower prices as many houses are now being injected into the market to prevent foreclosure. Okay, that's all well and good. But who's left to buy them? With the current situation, with so many people not being able to afford houses in a $250,000 to $300,000 price range, there's no way you're going to make it in the DC market where those home prices are 750,000 and up. Lots going to have to happen. Prices are going to have to come down wages are going to have to go up. And I don't see that happening, in my personal opinion, anytime soon. So this is something to keep an eye on. Real estate would probably be a good thing that we would always want to invest in, as the you know nobody's making more land, and our goal as investors is to buy low, sell high. But how low will this market go? We don't know. Same thing's happening in Florida, and for a whole different reason. You have insurance rates too high for people to afford. Um, there are some government actions being taken place. Governor DeSantis is got some interesting ideas on how to tackle this problem, since insurance companies are leaving that state in droves. Um, it's just a mess right now, all the way around, whether you're talking about crypto or in home prices. Finally, let's talk about purchases. Purchases of any kind. Purchases retail and our big box stores, or car purchases, which is the second largest purchase you're going to make in your lifetime. What's happening there? Well, retail, we've got boycotts galore. People are just really ticked off, and these boycotts are starting to have an effect. Just look at what's going on with Target, as they're going to miss some of their revenue projections significantly by their own admission, and their stock prices are also tanking to the tune of several million. I think it was $15 billion. It's uh, it's a lot to digest. Car prices, inventory skyrocketing, prices stubbornly high for some of the more popular vehicles, and people unable to afford them. So they're just piling up, piling up, piling up. Nothing's moving. Money's out of here. So, what do you do in this market where you really can't take advantage of any sales that may come up because people are still worried about their jobs? Um, it is not a good time to be a consumer at this point. If you can weather it out, maybe something come along. But again, who knows when that something or sometime will be? We're going to have to ride this one out. These are some unprecedented times, and even for the most experienced economists, it doesn't bode well for consumers. Now, as we are the consummate professional consumers, what is it that's going to make you get out into that market to make any purchases, be it crypto, land, houses, or just household spending? Um, these are some challenging times, and I don't think we are in possession of the leadership that is going to guide us out of this successfully. Leave your comments below. Let me know what you think, and I'll talk to you later.